Thank you for tuning in to another edition of the Vulcan Report. Right now we're looking at a chart of the S&P 500, the E-mini S&P futures contract. First of all, you notice that we are still in a bull market. We're trading well above the cumulus cloud here. We have the green bull at the bottom right hand corner right here. But there's some things that happen that we need to talk about here on the yesterday's trading for November the 4th. So this video will be for trading November the 5th, which is Tuesday of 2013. Alright, I want to break down this last bar here, okay, so you can understand where we are and where we may be headed. Alright, here's where we are. Basically, as a result of yesterday's close, okay, we have an engulfing bullish line, okay, and that's where the candle's real body completely contains the previous down day's real body, okay, and the engulfing bullish pattern is bullish during a downtrend. It then signifies that the momentum may be shifting from the bears to the bulls. However, if the engulfing bullish pattern occurs during an uptrend, which is the case here, it may be a last engulfing top, which indicates indicates a top. And now the test to see if this is the case is if the next day closes below the top of Monday's real body. So in other words, if we get a close on Tuesday below 1764, then we know that a short-term top is definitely been put in place in the stock indexes, and then we're looking now for a correction to ensue. Notice also we have a negative swing VIX. Here is the downtrend channel, the swing VIX, okay, and we also have negative swing VIX on the price bars, as you can see here on these candles, right? But it's a divergence because prices have been heading higher. Then we topped out here on the 30th of October, but yet we're still heading down on the indicator. And because the indicator leads the market normally 3 to 5 days in advance, sometimes it can be a little bit more than that, but on average 3 to 5 days, we now need to wait to see if price action is going to now catch up to the indicator. Okay? If that's the case, then we're looking to head back down toward excuse me, the 1700 mark in the S&P. That's 63 points from Monday. All right, that's where we're headed. All right, now it doesn't mean that we're gonna necessarily make it, but we're gonna get pretty close to it. Is what it's saying. Okay, so that's where we're headed. Now, as you notice, we did top up around this period here, as you can see here. All right. Matter of fact, let me go to the crosshairs here. All right, as you can see, okay, as you can see here, we're around, I want to say, I guess 1770 mark, somewhere around there. Excuse me. Yeah, we'll say 1774. So we didn't quite make it there. As you can see, we hit here. Alright, didn't quite make it. And now we have lower highs. And we have lower lows. Then the last 2 days we tried to form an up channel, but you can see the swing VIX is still on the down channel. So that's where we stand. So going in for Tuesday's trading, basically you're going to be looking to see if the market can get above the 1764 half. If it can, then we should be able to make a run toward that 1774 area. So you're looking at a possible 10-point upside. So you want to get long at 1764 half and look to get short at the 1758 half. If the 1758 half is triggered, it should help to accelerate the market down toward this downtrend channel line, going toward the 1700 mark. Truth be told, that looks like we're going to have to test this 1700 area. That's looking like where the market wants to go if we can lock into this downtrend channel in the S&P 500. So immediate support on an intraday for Tuesday is 1758.5. The next support level from there is going to be the 1733 mark. So that's a 30-point possible drop that we see coming this week in the S&P 500. Okay, looking at now our chart of the the crude oil. As you can see, we're still locked into this downtrend here. Here's the little bear. As of Monday's trading, you see on Friday we had a nice, we locked in, but then on Tuesday we kind of stopped. We stopped the downtrend temporarily when we hit the 94.06 handle here. But we still have accelerated momentum with this downtrend channel right here, and prices are starting to move in that direction. So it is possible for Tuesday's trading in the oil that we could bounce from this level and try to get back up toward the resistance mark, which is around, I want to say around the 101 level, so about $101 a barrel is going to be topside resistance. However, I think that we are headed toward $90 a barrel and then toward the 85 before we see any possible significant support. So between 90 and 85 is where I see strong support coming in as we accelerate downward momentum here in the oil. Now, like I said, we could pause on Tuesday. Actually, well, technically Monday looks like the pause date. So Tuesday could be a reversal to the upside, temporarily. We'll have to see. When you look at and measure this particular bar, we can say that a spinning top occurred, and that's where the candles, it has a little tiny, small body. You can also say that basically it's a session in which there's little price action, as defined by the difference between the open and the close. And during a rally or near new highs, a spinning top can be a sign that prices are losing momentum and that the bulls may be in trouble, right? But because this is a bearish pattern, it signifies that a steady downward bearish pattern is in play here. Okay, so that's something we need to keep in mind of. All right, so how do you play it going into Tuesday? Well, on the top side, I see a breakout of 94.58. would signal a long position, and a breakdown below 94 would trigger a short position. So long above the 94.58, short below the 94, and that's how we'll call it for Tuesday in the oil. If the 94.58 is triggered, like I said, upside resistance is going to be 101. We'll see how high the market can get. I don't think we'll quite get it. I think the first price target on the upside will be around the 96 handle, 96, 97. If it can continue to gather legs from that, then we hit the next topside resistance of 99, and then we should be open until 101. Alright, so that's what I see the layers of resistance on the upside. On the downside, like I said, if the 94 price trigger is hit, then downside momentum, I think we should get rather quickly to $90 a barrel by Friday, even possibly getting a lot of momentum and hitting the 85 mark. So somewhere between 90 and 85 by Friday in the crude oil is where I see us headed, all things being equal. We'll have to wait and see. Alright, what about gold? That's always the question. What about gold? Well, as you can see, we're still going nowhere. We're headed sideways in this market. As you can see, we have very wide trend lines. See this black line up here and this black line down here? Wide trend lines, okay? You're looking at $100 and just air, just sideways trading, $100 price range of sideways trading. So you can have a lot of movement day to day and still be going absolutely nowhere in gold. Gold can rally or crash $100 in a day and still be going nowhere. That's pretty devastating. Let's look at what happened on Monday. Alright, on Monday's trading, we have here a long upper shadow. This is typically a bearish signal, particularly when it occurs near a high price level, at a resistance level, or when the security is overbought, which was here. Back here, we were overbought, right? And this was on October the 29th, okay? That's what happened there. A spinning top is a candle with a small real body, such as you have here, which is Monday's trading. And this identifies a session in which there's little price action, as defined by the difference between the open and the close. Now, during a rally or near new highs, a spinning top can be a sign that prices are losing momentum and the bulls may be in trouble, which we already know, because here was that uptrend channel that we had in the swing VIX, as you can see. Then we collapsed. We topped out here October 29th and we collapsed. Price action has caught up with the swing VIX and is gaining downside momentum, as we have indicated by the lower lows and the lower highs. Okay? How then shall we play it? Well, for Tuesday's trading, long above 1334 and 60, short below the 1310 and 20. That's how it looked to play that. Whereas our top and bottom side. On the long side, if the 1334.60 is triggered, our top side resistance is going to be around, I want to say 1360. So we're looking at a nice little $30 run from there, approximately. On the downside, if the 1310.20 is triggered, our downside support, it's going to be around the 1250. That's the target right now. We're gathering momentum now. You see the swing VIX is headed there now. The swing VIX is already at 1270. Okay, so that's where we're headed. Swing VIX is range between the 1290 and the 1270. So price is trying to catch up with that. So that's what we're looking at for downside target in the gold. If that 1260 is taken out, then pretty much we have nowhere to go from there. There's really no support beyond that until you get down to I want to say 1180. All right, so that's quite a far way to drop from where we are now. So that's what I have for the gold. Alright, finishing up here with silver. Silver's gaining downside momentum as well, and it looks like it wants to test that $18 handle. On Monday's trading, we hit 21.58 to the downside. Going in for Tuesday, we're looking at a short at 21.56, and our target to the downside from there is going to be around 20.5. On the top side, long at 22.38. And top side resistance there is going to be around, I want to say $23. So around between 23 and 23.50. I do not see that happening. I think that the shorts is going to get triggered, and you can see already the swing VIX is already here at the $19 handle. Price action has not nearly caught up with that. It's going to have to break this trend line support area right here at 2064 first. But as you can see, the swing VIX is just roaring. It's crashing. So is this a sign of things to come? Since the swing VIX has just fallen out of bed here, is this a sign that prices are about to collapse in silver down to this $19 handle? Last time we had the uptrend channel here, even though it wasn't in a bull market, and the swing VIX went up to 25. We didn't get anywhere near that, and then it crashed. Likewise, this last uptrend channel here, swing VIX was signaling that somewhere around 24 to 24.50, nowhere near it, then we crashed. Okay, as you can see, so far the supports in the swing VIX, where it's always crashed to, was around this 1950 handle. Okay, The first one was around 1950. Then we kind of start rising a little bit in the swing VIX, but these bottoms are still foretelling, isn't it? So are we headed back down to $19 in the silver? I would have to say the answer to that question looks to be yes. It looks like we've broken out of that, and the swing VIX is heading lower. Now we just need price action to catch up with it. And like I said, we normally see the swing VIX leading prices 3 to 5 days out. Alright, so that's all I have for Tuesday's trading. Remember, take what you can, give nothing back.